Hello there today, viewers. From the Stuart Peterson Advisory Team, here's your Dairy Week in Review, recapping the week of March 30th, 2012. Well, as always, we'll start off by taking a look at our key dairy components and how they performed during the week. Overall, it was a pretty quiet trading week as we wrapped up the first quarter of 2012, especially for our cheese market as we start there first. As always, looking at the blocks barrels, as you can see, not a whole lot of action there. Blocks down just a touch, finishing at 149, and barrels actually finished unchanged for the week, so no action there, finishing at 146. Butter did slide a little bit down 6 cents for the week, finishing just above that 146 mark. As we finish up with the powders, did see some gains in the April dry whey contract, and a lot of those gains came in the tail end of the week. So you can see gains almost up 2 pennies for April dry whey. And also looking at April non-fat dry milk, did see some weakness there, down about 1 penny for the week. Now taking a look at our Class 3 milk prices of the week, and as you can see, some very significant gains, especially in May through September. You can see a lot of green on the screen there, double-digit gains in each of those months, and even more specifically in May through July, those 3 months, posting strong gains from anywhere from 51 to 42 cents. And you might be scratching your head just wondering how we got all the green, how we got all these strong gains with components not really doing a whole lot, especially cash cheese. And there's two answers there. First one, going back to cash cheese, you can see that there was some buying interest throughout the week, and just the fact that we didn't go significantly lower, we didn't break through the recent lows, was enough to really build some optimism and build some premium into these markets. And also, two big grain reports were out this morning. The grain stocks report showed really tighter old crop corn, which led to limit up moves for corn, and also the planned acreage report, which was a little more friendly for soybeans with lack of acreage there, and led to almost a limit up move for soybeans as well. So definitely caught a lot of support from that, and a lot of these gains on the board were from that move today. Earlier this week, USDA released the first commercial disappearance report of 2012. So go ahead and take a look at those January numbers and where they came in at. First, looking at total cheese, and did find some good numbers here compared to the previous month, and once again, that is December 2011. We did see growth there, up about 3.3%. Overall, very counter-seasonal. We see that growth occur from December to January, and we'll look at that on the charts in just a minute, but very supportive. Compared to last year, even stronger growth, up 4.8%, so nearly 5%, and that is the highest January we've ever seen. So very strong and very supportive for total cheese. Butter, different story here. Once again, butter continues to get slammed in whatever report we look at, down about 26.8% from the previous month, down a little less compared to the previous year, down about 9.4%. And non-fat dry milk to close it out, a little bit of a mixed report here. Compared to the previous month, up 22.2%, but compared to the previous year, down a little bit there, as you can see, down about 2.7%. Now taking a closer look at the total cheese disappearance number for the month of January, flip over the charts and really do a comparison over the past 2 years and how this report has trended throughout the entire year. So you can see 2010 represented by the blue line here, 2011 represented by the green line, and this first dot here represented by 2012, this first report that we got for the month of January, as you can see on the bottom end there. And overall, the first thing that really sticks out is just how high this is. You can see right close to that 950 million pound mark, came in exactly at 946. You can see compared to the previous year, which was closer to 900 million, and even lower in 2010, below that 850 million mark. So overall, very significant growth for the month of January. Once again, the highest January we've ever seen come in. So overall, very supportive there, and just the counter-seasonal nature of it as well. You can see as we walk through the year, typically January is not a very high month. We do hit a low in February, pick back up in March, and as we move into the second quarter, pretty flat there. Hit another bottom as we move into July, and then start to trend higher as we get into that third and fourth quarter. We see the highest demand with the holidays around the corner, and also looking at that, where this report came in at, really almost higher than we see in those third and fourth quarter months when demand is at its highest. So very counter-seasonal and very supportive to see this number. Now flipping over the charts, we'll take a closer look at the weekly block barrel average. And overall, not too exciting this week compared to the past few weeks, but good to see that we are really holding the rope and holding firm above the recent lows and where this key support is at. As you can see, where we finished 147.5, and where we were about 3 weeks ago in that 146 range. So we are really back at a pivot point with really this flat line and really support holding. You can see overall we don't hold really sideways for too long as we look back on the charts. You can see going back to last fall, the sideways range we had, and we screamed up higher from there. Broke out of it, saw some volatility to the upside. Going back even further on the charts to the top end, you can see we were really sideways at this point and then came crashing down from that. So once again, we are at a pivot point here to see one of those two happen if we do hold the rope here in the 150 level. Now return to the milk market, we'll look at the April through December average milk price on a weekly chart to give us a little more perspective of how the entire year has been trending over the last few weeks and even months. So you can see where we're at here this week, where we finished right at 1626, and considering where we were to start the month at 1540 is where we bottomed out there. Good to see the strong gains and really that bounce off that of over 80 cents. So definitely good to see that. When we look back at these 5 weeks, we have been up 3 of those weeks, so once again good to see that considering the massive streak of lower weeks we had here. So once again very supportive that we have bounced above that. Overall key support when we look further back on the charts is in the $16 range. You can see we bottomed out there going further back in the charts. And once again, we have been holding above that the past 3 weeks, so that is very supportive. As we continue to hold above that, an upper end resistance is in that 16.5 range. As you can see, we did bump into that as well, further back in the charts. And finally, looking into next week, a few things on our radar. The first one being cash cheese, really back at a pivot point, really at a critical juncture, with the recent lows only a few pennies beneath us, so we are on thin ice there to the downside. And overall, if we are going to move higher from here, definitely need to use this recent support as a platform and start to build higher without looking back to the downside. Also looking at key reports out next week, the dairy products report for the month of February is coming out Wednesday, April 4th. As always, thanks for watching. We'll see you next time.